A warm welcome to you, my dear children. We meet again with a new lesson, a fresh new lesson, that is unit number 10, Purchases Journal, Sales Journal, and General Journal. In your syllabus, in your textbook, unit number 10. Yeah? All right. In this lesson, as the topic, the heading shows you, we are going to discuss about these prime books. Discussing about these prime books. All right. Purchases Journal, Sales Journal, and General Journal. 3 prime books, prime entry books, or in some places they are called subsidiary books, or in some other places they are also known as books of original entry. Books of original entry. These are the books. And these are not the only books, as you know, as you very well know. No, these are not the only books. The Purchases Journal and the Sales Journal and the General Journal, except these 3, we have already learnt about cash book and petty cash book. Those 2 are also prime entry books. We did this lesson few lessons back. We learned about cash book and petty cash book. All right. Now in this lesson, unit 10, these 3. Shall we? This is the chapters or the subtopics included in this lesson. The breakdown of subtopics. Children, we have first subtopic, that is 10.1, Purchases Journal. We have Purchases Journal. Under Purchases Journal, we have source documents required to prepare the Purchases Journal, posting transactions or posting items in the Purchases Journal to the ledger accounts. Yeah? Instead of posting, I'll use another word. Transfer. Transferring of the items in the Purchases Journal. Items in the Purchases Journal to the ledger accounts. Something that we have learned, it is not new. It's not anything, it's not something that you haven't heard. Well, you have heard, we have talked about these prime books. Of course, yes. But in this lesson, you are going to prepare. You're going to prepare these prime books, and you are going to get the information in the prime books. You're going to get them to the ledger accounts from the prime books. Okay, according to the double entry system. Then we have the Sales Journal. The Sales Journal. Under that, source documents required to prepare the Sales Journal. Source documents. Then posting the items in the Sales Journal to the ledger accounts. Just like I explained above, this above subtopic in under purchases journal. Under sales journal also, you have to transfer the items in the sales journal to the ledger. Items in the sales journal to the ledger. Okay. Yeah, it's something very simple. Then, children, we have general journal. Finally, instant cash transactions conducted via technological means. Something that is going to a bit into the ICT side of our subject. Things which are a little bit, into the ICT field. All right. Okay. That's it. Let's go. Going ahead with the lesson. First of all, we have purchases journal, children. This is the purchases journal, first prime book that we are gonna study under this lesson. It's a prime entry book. Prime entry book. No question about that. It's a prime entry book. Is it a ledger account too? Is it a ledger account too? Well, no. No, children, it's not a ledger account. It is only a prime entry book. But we have learned about prime entry books which act as ledger accounts too. Well, you know those. You know there are some prime entry books, a couple of prime entry books, which are also ledger accounts. They are ledger accounts too. Don't act like you don't know. We did an entire lesson about these two prime entry books. An entire lesson. Couple of lessons back, I have done one entire lesson about these two prime entry books. These two prime entry books which are considered as ledger accounts too. What are those prime entry books? Not the purchases journal, not the sales journal, not the general journal. No. Yes, that's right. Who said that? Who said that? Good. Children, if you remembered, that's very good. The prime entry books which has a dual role, or which are prime entry books as well as ledger accounts. Only two prime books you have learned. Those two are cash book and petty cash book. Cash book and petty cash book. Remember, children, purchases journal, no dual role. Sales journal, no dual role. General journal, no dual role, which means they are just prime entry books, not ledger accounts. Yeah. Businesses purchase goods with the objective of reselling. These goods are purchased either on cash basis or on credit basis. Okay. Now I'm going to underline the important parts. Important parts, okay? Either on cash basis or credit basis. You get what it says? Do you understand what it says? It says all the businesses, any business which is involved in trading. Any business which is involved in trading. Trading means what? What is trading? Tell me. Yeah, that's right. Trading means buying and selling goods. Buying and selling goods and services. Services can't be bought. Services can be bought. Yeah. Goods, of course, can be bought and then, sold, resold. Reselling of goods. Reselling of goods. That is the main income of trading businesses. Selling of goods, sales, income. The main income of trading businesses. Trading. Because trading is buying and selling goods and services. So, these goods that are resold to customers first should be bought. Yeah, where else the businesses, the shops that you go to, where else do you think that from where else do they get the goods? Do you think Santa Claus comes and brings all the goods, all the goodies and gifts? No. Is it the fairy godmother or angels who descend down from the heavens who bring the goods? Where do these shops get the goods from? In order to sell, they should get the goods first. They buy. They buy from other suppliers. They buy from producers. They buy. Okay? Yeah. Buying can be done on cash basis or on credit basis. Buying can be done if the businesses, the shops, they can buy the goods either on cash basis. That means then and there you pay cash and you buy the goods. Bring it to the shop. Okay. You buy the goods. Bring them to the shop. Okay. Then and there you pay cash. Cash basis. Cash basis purchases are known as cash purchases. That's what it says. These goods are purchased either on cash basis or on credit basis. Cash basis purchases are known as cash purchases. Cash purchases. Cash purchases, of course, should be done. Goods should be purchased by paying cash. Then cash purchases go to the cash book. They are recorded in which prime book? Yeah, that's right. Cash book. So, children, in this prime entry book, which is the purchases journal, in this prime entry book, only credit purchases are recorded. Credit purchases. No cash purchases in the purchases journal. All right? Of course. Why do you record cash purchases in the purchases journal when you have to record the cash purchases? When you must record the cash purchases in the cash book. Why do you record again in the purchase journal? No, cash purchases are not recorded in the purchase journal. Only credit purchases are recorded in the purchases journal. Remember. Okay. That's very important. I'm stressing on this point because most of the children, they make this mistake in exams. We have come across these answers, your answers. You always select cash purchases. No. You always record cash purchases in the purchase journal. It's wrong. Record only the credit purchases. Okay? Credit purchases of trading goods, children. Trading goods. That is the other thing. Credit purchases of trading goods. Assets, if you have a transaction where you have purchased an asset, such as a motor vehicle or a building, can be purchased and can be purchased on credit basis. But those transactions are not going to this book. Those are asset purchases. Okay? Yeah, remember these 3 main points. Okay? I'll write them down, but first of all, we'll read the text. Goods purchased on credit basis are recorded in a separate record named as the purchases journal. This is also known as the purchases daybook. Purchases daybook. Okay. The purchases of trading goods on credit basis are initially recorded in the purchases journal. Okay, there you go. That is the main tagline or the point to remember. Purchases of trading goods. Purchasing of trading goods on credit basis are initially recorded. Initially, which means before you enter the transaction in any other place, the very first place that you should record the credit purchases of trading goods is this place. Purchases journal. Okay. Example. If a business buys and sells stationeries, the purchase of stationeries on credit basis is recorded in the purchases journal. Okay, right. So there we go. When purchasing goods on credit basis, the parties providing goods are known as suppliers. Okay. Parties providing goods are known as suppliers or trade creditors. Trade creditors. The amount payable to creditors are liabilities. Of course, liabilities. Because we don't pay for the goods that we purchase. We don't pay for the goods that we purchase. Alright? We don't pay. We just bring the goods. We just buy the goods and bring them to sell in our shops. But we don't pay for them. These are credit purchases now. We are talking about credit purchases. ණයට ගැනීම. ණයට ගැනීම. That's how we call it in Sinhala. Yeah. Those parties, those suppliers are creditors to our business. Okay? Yeah. The amount payable to creditors are liabilities. Of course, suppliers, when providing goods on credit, prepare and send a source document including information about the supply. There you go. The source document. is the invoice. The source document related or relevant for credit purchases is called the invoice. Yeah. It's called the invoice. In the perspective of the purchasing business, it is the purchase invoice. If we are purchasing goods, the invoice is a purchase invoice. The source document is a purchase invoice. Okay. The information in the purchase invoice is required to be recorded in the purchaser's journal. Yeah. Alright, you think of it in this manner. I'll give you an example. I will give you an example. Let's think of it with this example, using this example. Now, children, I am a businessman, a shopkeeper, a sole trader, one owner business, and I'm carrying out a stationery shop, a bookshop. Okay. So what are the goods that I sell? Hardware items? No. It's a bookshop. Yeah, books and stationeries. Yeah, it's a bookshop. So I'm selling books and other stationery items. Where do I get the goods from? Where do I get the goods from? I have to buy. I have to buy from have to purchase from producers, suppliers. There are many stationery book producers. You know, Atlas and ProMate, and I can mention a number of brands. So I'm buying the books from Atlas company and ProMate and such companies in our society, in our country. Those are the main producers of books. And I'm buying the pens from, again, Atlas company. Pens and pencils and erasers and rulers and, you know, all the stationeries that you need as students. I'm supplying, sorry, not supplying, let's say selling. I'm selling them. Okay, I'm selling them. From where do I buy? Purchase? From those companies. Okay. Let's say I'm purchasing, let's say I'm purchasing a large stock of books, CR books and exercise books, a few boxes, few stacks of books. I'm buying from Atlas company. Okay. Then, children, supplier is Atlas. Okay. Supply is Atlas. Now, I'm purchasing, right? I'm purchasing now. If I purchase from Atlas company, a stock worth of 12,000 rupees, for this 12,000, for this amount, I need to prepare a invoice, a stock of 12,000. Okay, I need to prepare an invoice, but only if I purchase on credit. Only if I purchase on credit. Okay, it's called the purchase invoice. Purchase invoice. From Atlas Company, a stock of 12,000 is purchased by me for my bookshop. Okay, so this purchase of 12,000, for this purchase of 12,000, I need to prepare a purchase invoice. That is the source document. For my business, purchase invoice is the source document. This source document, the purchase invoice, contains all the information of the transaction. The name of the supplier, amount of the stock, value of the stock, the price of the stock, any discounts, trade discounts, if there are any trade discounts, date of the purchase, everything is included in the purchase invoice. Okay, we learned about purchase invoices and other invoices and receipts and vouchers and a variety of source documents in a previous lesson. Can you remember? You must remember these things. You must remember these things. These are theory knowledge, the basic knowledge that you need. This is the source document. Source document for this transaction or the transaction of credit purchase. Source document for this transaction or for the transaction of credit purchase. Okay, this source document is the invoice, the purchase invoice. All right. Okay, all the information in the purchase invoice is required to be recorded in the purchase journal. These invoices, purchase invoices, are collected and recorded in the purchase journal on a daily basis. Yeah. Okay. Thereafter, those transactions are posted to the ledger on a later date to the ledger accounts. Also, you must transfer the information from this purchases journal, from the purchase daybook. But all the invoices every day on a daily basis are collected and then recorded in the purchases journal. Okay. Good. Oh, I forgot to draw me, the businessman. The businessman is here. This is me taking the goods. Okay. Right. Okay. There you go. We have a purchase invoice. A purchase invoice. This is my business or the business who is purchasing. Deshan Bookshop. Let's say my bookshop is Deshan Bookshop. Okay. It's in Dehibala. Main Street, Dehibala. Invoice number 120. The invoice number is here. All right. Invoice number is here. Yeah. And the goods are purchased from manager from Rashmi Bookshop. Okay. Goods are purchased from Rashmi Bookshop. Rashmi. Goods are purchased from Rashmi Bookshop. That is in Maharagama. See, I told you all the information, everything is here. All the information are on the purchase invoice. Yeah. Then what goods that I have purchased? What goods have I purchased? The description of the purchase. Okay. Here, children, I have purchased drawing books, 40 of them. 40 drawing books. Then CR books, I have purchased 20. No, I'm sorry, that is 200. CR books 200. I have bought 200. Then exercise books I have bought 120. Okay. And one drawing book is 100 rupees. So unit price is 100. When you multiply 100 by 40, because I have bought 40, 100 into 40, it's 4,000. That is the total value of drawing books. Likewise, 130 into 200 for the CR books and 60 each. 60 each for the exercise books. 60 is the unit price. That means one book is 60. Okay, one book is 60. 60 into 120, it's 7,200. Now the total that I have to pay, it's 37,200. Total I have to pay is 37,200. Okay, and children, important point, I have got a discount. Yeah, I have got a discount. 10% trade discount. Got a discount from the supplier, 10%. And that is out of 37,200. When you calculate 10%, you get the answer 3,720. That is subtracted from 37,200. The discount is deducted, and the net value is 33,480. That is the net value. 33,480. That is the net value that I have to pay. Because I purchased. Okay. Likewise, easy, very, very simple things. This is the source document, the purchase invoice. Yeah. But there's something more right underneath, which is, a little, it's a little sentence. Underneath the invoice, at the bottom of the invoice, it's this sentence. Let's see what is this sentence. All checks should be written in favor of Deshan Bookshop and crossed. All checks should be written in favor of Deshan Bookshop and crossed. Right. What can you understand, or what did you realize just now? Did you realize something? I'm just asking you, did you realize something? What did you realize? After you read the sentence here. After you read this sentence in the bottom, what did you realize? All checks should be written in favor of Deshan Bookshop and crossed. All checks should be written in favor of Deshan Bookshop. Deshan Bookshop is expecting the payment by check, and if the payment is paid by check, if the amount is paid by check should be crossed. That is the meaning of this sentence, isn't it? Then who is expecting the payment, children? Deshan Bookshop. Which means, are they, Deshan Bookshop, are they are the ones who are buying? No, they are the ones who are selling. They are the ones who are selling. To whom? To Rashmi Bookshop. You got it? Deshan Bookshop, they are selling to Rashmi Bookshop. Okay. Is it clear? I mean, did you get this clearly? Deshan Bookshop is the seller, Rashmi Bookshop is the buyer. So this invoice is created or is issued by Deshan Bookshop to Rashmi Bookshop. Okay. For them, for Rashmi Bookshop, it can be considered as the purchase invoice. But for Deshan Bookshop, this is a sales invoice. They are selling. You got it? This can be considered as a purchase invoice by Rashmi Bookshop because Rashmi is purchasing. Rashmi is purchasing from Deshan. Got it? So for Rashmi, this is a purchase invoice. They can consider this as a purchase invoice. And they should pay to Deshan Bookshop. If they are paying by check, they should pay with crossed checks. That's what it says. And there's a condition here. This is something most of the children do not understand. This condition. It says 5/30. Okay, let me highlight that. I'm talking about this condition now. I'm going to highlight it. Can you see it now? Let me move to the side. Now you can see it, right? It says 5/30 and net 60. 5/30 net 60. This is a condition which is imposed by the seller. Who is selling? Deshan is selling to Rashmi. So Rashmi is the purchaser. Deshan is imposing this condition to Rashmi. Okay, and this condition means, children, it means this. Carefully observe. Okay, carefully observe. Condition means this. The amount or the total value should be settled within 60 days. That is the meaning of net 60. But if the purchaser can settle within 30 days, if the purchaser can settle within 30 days, she's gonna get a 5% discount. Got it? Do you understand? If Rashmi can pay this bill within 30 days, she's gonna get a 5% cash discount for 30 days for prompt payment. All right. Now, generally, the condition is imposed by the seller, the Deshan's business, to the buyer. Buyer is Rashmi's business. Rashmi should pay the amount, the entire net value, that is this value, 33,480, within 60 days. Okay, should pay within 60 days. But if she is able to pay earlier, within 30 days, she's gonna get this discount, that is 5%. Okay, that is the meaning of 5/30. It's a cash discount, and it is a benefit for Rashmi, the buyer, the purchaser. It is a benefit. Yeah, don't you think it's a benefit? It's a benefit. It's a benefit, my dear children. It's a cash discount. So Rashmi is gonna get more of a discount. More discount. In addition to this trade discount, she's gonna get another cash discount. Okay, that's the meaning of this condition. This is a invoice. It can be a sales invoice, it can be a purchase invoice. All right, the manager has signed it, so it's validated. Okay, this invoice is first of all recorded in the books of Rashmi's business. In the books of Rashmi's business, which book they should record this information? In which book? Purchases Day Book, or the Purchases Journal. All right. Oh, it says it is given here, children, the meaning of that condition. The condition 5/30, net 60, indicates that the purchaser should settle the credit within 60 days. And if she settles within 30 days, 5% cash discount will be deducted. 5% cash discount will be deducted. Okay, right, done. And here a little bit more about trade discounts and cash discounts. You should go through these things. They are important. They will, refresh your memory. Trade discount is the reduction in the listed price at the time of purchase. This trade discount is deducted in the invoice and not recorded in accounts. Trade discounts are not recorded in accounts. They are deducted and the net value is recorded. Okay. After deducting the trade discount, the net purchase value, just like I said, should be recorded in the purchases journal. So invoice value should go to the purchases journal. Yeah, something that can forget. So better you keep it carefully. Invoice value will be recorded in the purchases journal. Okay. Voila. Here you have a format. This is the format of the purchases journal. Date is there. Invoice number. Supplier's name. Total value. Here, when you record the total value, you should record the discounted value. Discounted value. You get what I'm saying, right? After the trade discount is deducted, after trade discount deducted. After the trade discount is deducted. Got it? Okay. Done. This is the format of the purchases journal, and it's not something that you should by heart and memorize. It's something very simple. Date of the transaction, name of the supplier, and the value of the invoice, the invoice value, and mention the invoice number too. Okay, that's it. All right, children, we have some example transactions. Net value of the invoice number 115. Goods are bought from Namal, 22,000. 22,000. Invoice number 115 should be recorded in the purchases journal. Here you go. First of the month, 115, Namal, 22,000 is the net value from Namal. Okay. First of the month. 10th of the month. 10th of the month. Net value 28,000 under the invoice number 65. Yeah, net value of the invoice number 65. Goods are bought from Sahan. Goods are bought from Sahan. First Namal, then Sahan. Yeah. Okay. 65. Invoice number 65. 10th of the month. Sahan. 28,000. Next. 20th of the month. 20th of March. Net value is 26,000. Invoice number 43. Goods are bought from Punmina. No, it's not Punmina. It's Purnima. It's Purnima. Purnima, yeah. Goods are bought under the invoice number 43. Value is 26,000. Net value is 26,000. On 20th, okay, let's see, on 20th, invoice number 43, Purnima, 26,000. All right, finally children, finally, let's take a different color so that it's clear to you. Net value on 25th of the month, net value of the purchase is 12,000 under the invoice number 48. All right, net value of the purchase is 12,000 under the invoice number 48. Bought again from Purnima. Again from Purnima. That's why I used another color, because Purnima is the same supplier, but we have bought 2 times from Purnima. Purnima must be a good businessman, right? Buying more and more from Purnima. Yeah. 25th of the month, invoice number 48. Purnima, from Purnima, 12,000 worth of goods. $25th, net value 12,000 under the invoice number 48. Okay, 25th under the invoice number 48 from Purnima, 12,000. At the end of the month, children, because all the purchase transactions are recorded now, the purchases journal will be prepared as follows. It is already prepared. So at the end of the month, you total the prime books. You total all the prime books, not only the purchases book. You total, and the total is how much? Total is 88,000. You get 88,000. That is the total. Total should be debited to the purchases account. That's it. The total purchases, credit purchases. Remember, credit purchases. All these are credit purchases. From Namal, it's a credit purchase. From Sahan also it's a credit purchase. From Purnima, 2 times. All the purchases are credit purchases. All these credit purchases finally adds up to be 88,000. That total must be debited to the purchases account. There you go. Must be debited to the purchases account. There you go. That's it. Debited to the purchase account 88,000. Finished. Not finished. People, where is the double entries? Where are the double entries? We just debited one amount, 88,000, in the purchases account. Should be credited. Should be credited. Don't look surprised. Every entry which is debited must be credited. Double entry theory, double entry system. That's how you prepare the ledger accounts. So if you prepare the purchases account and if you debit 88,000 which is taken from this purchases journal, where do you credit this 88,000? Where? Yeah, somebody's trying to tell me that. Creditors. You should credit 88,000 to an account called creditors account. Yeah, you came very close. Not to one account, children. You should credit individually to these creditors accounts. Individually, which means Namal, you should draw a separate account called Namal account. Credit 22,000. Draw a separate account called Sahan's account. Credit 28,000. Draw another account called Purnima account and credit 26 and 12,000 both. Purnima credit both. Then 88,000 is debited in the purchases account. That's all right, no problem. Debited in the purchase account and credited in all these accounts one by one. Okay. That's it. Let's see. Posting transactions recorded in the purchase journal to the ledger. Well, they have again explained how the ledger accounts should be created. Let's go through very quick. Very quick. Total in the purchases journal will be debited to the purchase account. Too quick. Okay, I'll slow down. Total in the purchases journal will be debited to purchases account. All right. Thereafter, each value will be credited separately to the creditors accounts. each value will be credited separately to the respective creditors' accounts. Okay. Again, the same thing, right? The total in the purchase journal will be debited to the purchase account. Yeah. Okay. Creditors' accounts are liability accounts. Therefore, an increase in liability. An increase in liability. Should be in the credit side. Increase in liability should be recorded in the credit side. So all creditors' accounts are credited. Purchase is debited. Okay. Do you want me to draw the ledger accounts? Seriously? Yeah. Okay. Okay. Purchases account, and I need 1, 2, 3, 4 creditors accounts. All right. I'm just drawing T formats, children. I can't waste the time. I can't use the time to draw full formats. Just to show you some accounts. Drawing full formats is, is unnecessary. So I'll just draw T formats. This is the purchases account. And I need Namal, then Sahan, then Purnima. Namal, Sahan, Purnima. Again Purnima. Oh, no need of another account. Purnima is the same person. 2 transactions from the same supplier. Okay. Debited to the purchase account 88,000. See? So you debit 88. I'll move so you can see it. You debit 88. Saying the description should be $88. Okay. I hope it's clear to you. It's 88. The description should be creditors. Creditors. Date should be here, the last date of the month. 30th? No, 31st. 31st. 3rd. Date. Okay. Purchases account debit. Debit side. Debit. Total. That is 88,000. Individual creditors accounts debited with individual amounts. Debited with individual amounts, right? So Namal account 22,000 and Sahan's account 28,000 and Purnima's account debited. Namal is debited, Sahan is debited. Where's your attention? How can these accounts, how can I debit these accounts after debiting this entry? Again, the double entries should be debited. Children, be attentive, okay? Be mindful. Be mindful. You do this mistake all the time. You debit one entry and instead of crediting the double entry, you again debit the other accounts too, just like I did. Something that you always do, a mistake. That's what I showed you. Don't do that mistake. Nama's account should be credited with 22,000. 22,000. Sahan's account should be credited with 28,000. Purnima's account should be credited with 26 and 12,000 on those 2 dates. Okay, dates are here, so don't forget to mention the dates. All right, mention the dates. And description should be purchases, 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 purchases. Okay. Okay. Double entries recorded. Each individual creditor should have an individual account, and those individual creditors' accounts should be credited. Okay. Purchases account is debited. That is how you transfer the information in the purchases journal at the end of the month to the ledger accounts. Beautiful, isn't it? Well, it's the double entry system, children. And today you learned one important journal, that is the purchases journal, where we record all the credit purchases, only the credit purchases, credit purchase transactions, credit purchases of trading goods. Yeah. And how, after all those transactions are recorded, how the information is transferred to the ledger. Okay. That's it. I hope you understood all this, children. It's simple accounting, bookkeeping, things. Bookkeeping, recording of transactions in books of accounts. Right? Until next time, practice some questions, go through some activities in the textbook, and be good. I'll meet you again with the sales journal, the second journal in the lesson. Thank you very much for being with me. See you soon.